Hey everyone, welcome back to Corporate Decoder, the place where we take big corporate documents and turn them into bite-sized insights. Oh, and by the way, if you appreciate getting straight financial insights from corporate filings, make sure you are subscribed, and we also have a Discord community linked in the description below. Have you ever wondered how companies that lend money to other businesses are actually doing not just the big banks, but the specialized players? This filing from Lord Abbett Private Credit Fund gives us a peek behind the curtain into their lending activities and how well those loans are performing. So here we have a look at Lord Abbett Private Credit Fund's activities as of late 2025. It's a report that tells us about new loans they made and how their existing investments are holding up. Let's dive into the new loans they committed to between October and November of 2025. They were busy adding about $118.8 million in new commitments. So they are definitely out there trying to grow their loan book. Looking at some of the specific companies they lent to cards. Live Oak Holdings got a commitment of $28.6 million. Centaur Holdings III LLC received a hefty $43.5 million. This shows the kind of businesses they are backing the dollar amounts. Tell us this fund is dealing with significant sums of money. Interestingly, they also put $3.5 million into a joint venture called Esplay Private Credit LLC. This isn't just lending directly, it is also about forming partnerships to expand their reach. Now let's talk about how strong the companies they lend to are. They are keeping an eye on what is called leverage. That is basically how much debt a company has compared to its earnings, like a measure of how risky they might be. The weighted average net leverage is 4.7 times. This suggests that the companies they invest in have about $4.7 of debt for every dollar of earnings before interest are. X's depreciation and amortization. This is a key number because high leverage can mean trouble if business slows down. Another important metric is interest coverage, which is 2.3 times. This means that the companies they lend to have about $2.3 of earnings available to pay for their interest expenses. On the debt, a higher number here is better. It means the companies have a good cushion to make their interest payments comfortably. If this number drops too low, it means a company might struggle to pay its debts. And what are they earning on these loans? The weighted average yield on their debt investments is 9.6%. This is an attractive rate of return for the fund. But it is important to remember this is the yield at cost. Actual returns could be different based on how these loans perform over time. By the end of October, the fund's total value or net asset value was about $454 million, and the value per S-share was $25.23. Good news for investors, they declared a distribution of about $0.22. Per share, this is money being paid out to the shareholders, which is always a welcome sign. They also recently sold about 687,000 shares of their own stock, raising around $17.3 million. This is a way for them to bring in more capital to make even more loans and grow the fund. Now, looking at these numbers, Lord Abbett Private Credit Fund seems to be actively managing its portfolio and bringing in new capital. They are investing in businesses that appear to have reasonable leverage and interest coverage. But always remember, these are averages and individual company performance can vary greatly. The 9.6% yield is competitive for this type of lending, but also comes with inherent risks associated with private credit markets. A key risk to watch is how the broader economy affects these leveraged companies. If there is an economic downturn, companies with high debt could face significant challenges. Overall, this report shows a fund that is growing its loan book and distributing returns to its investors. On the surface, things look solid, but the true test will be how these leveraged businesses perform in the face of potential economic headwinds. The fund strategy seems focused on senior secured debt, which offers a degree of protection, but it is still a high-risk, high-reward area of finance. Alright, that is our breakdown of Lord Abbett Private Credit Fund's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives, and don't forget to check out the Discord in the description. Thanks for watching. See you next time.